What a crazy roller coaster month we just had here in March 2020. And now going into April 2020 here, we have a ton of great stocks that are on sale. So what I want to do in today's video is I want to discuss 3 great companies that I think are providing excellent value here in April 2020. And I'm going to give you my thoughts on why I think each of these companies could potentially be great winners over the long term. All I ask from you guys is that you just consider hitting that like button down below to help this channel and help this video get 1,000 likes so we can set a record here on the channel. So if you wouldn't mind, just hit that like button down below. All right, let's get started here. So Align has been a company I covered back in 2019 when we saw the stock drop to the $170 range, and I was a big buyer back then. Since then, the stock rallied up to $300 a share, almost doubling in a span of just 3 months, which shows the volatility of the stock even in a calm market. Unfortunately, though, in February, we had this global issue get some attention in China, which is a big market for Align, and this resulted in the stock starting to drop. Now, because Align is a very volatile stock, even in calm markets, you can imagine how volatile it is in volatile markets, and because of this, it's really taken a massive beating the last month or so as the US market corrected as well, and that brings us to today. So Align, if you're not aware of what they do, is an invisible braces manufacturer, and I like them versus the competition because they have a strong relationship with dentists. Dentistry, I believe, is something that will be around in its current form for a long time because people like going in and they trust their dentists for things like regular cleanings, cavities, or any other teeth work. Because of this, I see Align as a unique play on the healthcare sector, and it's kind of an industry that I think will just keep growing as time progresses. There's a few reasons though why I like this company on a fundamental level. The first is what I just mentioned, is their growth. And really, Align is a monster growth company, and because they are so niche, they have been able to become the #1 player in the space of the new clear braces trend. Here you can see in 2019, they had revenues across the segments grow 20% or more, showing that this company is in high demand. Their flagship product is called Invisalign, and I'm sure you've seen the ads for this if you ever go to the dentist or walk by a dentist office. It's pretty much everywhere. You can see here the growth of this product has been steadily increasing year over year, which is a very healthy sign for Align. Now, if you just look at the margins here, you can see gross margins has been steadily above 70% and operating margins is in the 20s, which is very, very healthy for Align. These margins have led to a very healthy balance sheet as well for the company, currently sitting on $868 million in cash with essentially $0 in debt. This gives me as an investor a lot of confidence for this company to keep growing, and even during tough times like right now, I have no doubt that the company will be just fine over the long term. The other 2 things I want to point out about their balance sheet was that their spending was down last year while their free cash flow was actually up, which is a very positive sign for a healthy business. So in summary, why I'm so bullish here on Align: they're in a growing industry, invisible braces, which in my opinion will always be in high demand. And the reason I say this is because every single year there are new teenagers, and teenagers want to have their teeth straight, and parents want them to have straight teeth. So typically what they do is go and get traditional braces, which are obtrusive, they're painful, and they just don't look good. So a lot of people are actually going to opt to go with clear braces here, which are none of those things. They're not obtrusive. You can actually just take them off whenever they're uncomfortable. And this results in a huge market potential here for Align. I also like that the company has incredible growth and margins. And I also absolutely love their balance sheet with the amount of cash they have on hand and the amount of free cash flow that they generate on a yearly basis, which is a very, very healthy sign for this business. Now, the crazy part is that despite all of these positive things for the company, they are trading at a 4P under 30 and a 2021 PE at almost 20. Honestly, to find a company with a balance sheet this strong, with growth this strong, and a PE this low is very rare, and I think Align is a hidden gem at these levels. Well, some analysts seem to have realized this recently, and on tip ranks here you can see that the consensus is over a 50% upside, which I completely agree with. I think there's even more upside actually over the long term with Align as they grow from a somewhat $14 billion company to well over a $30 billion or $50 billion company. The stock has taken a correction of 50% like we briefly discussed here, and with the current market volatility, I wouldn't be surprised to see this even lower. But at current prices, back to the 170s, which is when I was buying this company in 2019, I have to say that I want some more Align exposure here. You have to remember though that in the short term, this company will get hit pretty hard. Their product is sold and endorsed through dentists, but with times like this, many dentist offices are closed, so there's less sales coming in. However, I see this as a short-term issue, and I think sooner or later we'll see things like dentist office start to open up again, because people need to go in when they have teeth problem, cleanings, all that kind of stuff. Regular maintenance for your teeth is very important, and people do realize that, which is why they visit the dentist frequently. So I think that the current situation here gives us an incredible opportunity in Align Technologies, and I for one am very interested in picking up more shares of this company at these prices. Who knows how long the current issues last, but I do think that over the long term we're probably not going to see prices in the $200 range for Align anymore, as it's going to be much higher as things turn around and the company benefits from all of that. So I have covered Boeing many times on this channel. You guys know I'm a shareholder of Boeing, but I think it's time we take a look at their number one rival, pretty much their only rival here, AIRBUS. AIRBUS is a European company, and as the name sort of implies, they make airplanes. If you travel via airplanes, chances are you've been in an Airbus or two. The way that I see AIRBUS right now is that this is a company that gives you as much exposure to the airline industry like Boeing, but without all of the issues. There's no FAA certification issues, there's no bad press, and there's no concerns really of bankruptcy anytime soon. In fact, the company just built out a $32 billion buffer just in case things get really bad with the global issue. Now don't get me wrong, AIRBUS is struggling though because of the current issue, because their customers cannot afford to purchase planes right now thanks to the grounding and closure of airports worldwide. So what the company did was actually go ahead and suspend their dividend for now, similar to what Boeing did, and they actually went ahead and removed guidance for the year as well, as there's too much uncertainty right now. Funny enough, this may actually give you a bit more relief in your Boeing position if you're a shareholder, because it's clearly seen as an industry issue right now, not solely a company related issue. But anyways, when things are good like in 2019, this is how the company typically performs. Strong revenue growth, strong EPS growth, strong free cash flow growth, and good numbers across the board really. Similar to Boeing, they have a few segments to their business as well. Apart from the typical airplanes, they also make helicopters, and they also do a lot for aerospace and defense, which gives them some diversity as well. So really, if you're a fan of air travel over the long term, your only two options right now are Boeing or AIRBUS, and both companies are trading at incredible values. Analysts are predicting over a 65% upside in this stock, and I think once things do stabilize a bit here over time, we can definitely see these prices in AIRBUS. Fundamentally, like I mentioned, their business is strong and they don't have the negative press and issues surrounding their competition, Boeing. So as a result, they are in a much stronger position to benefit from the eventual recovery from this global issue whenever that happens. Bottom line here is that I believe airplanes aren't going anywhere, and the chart for AIRBUS here shows that this company was absolutely fine until this issue hit. It was making new highs, the company was just chugging along, business was strong, and they were benefiting from Boeing's issues over the last few years. However, in just a few short weeks, the company fell 67%, and that was just an unreal crash in such a large established business, but it is what it is. This has presented us investors an excellent buying opportunity for the long term, as things continue to be uncertain here in the short term. So I wouldn't be surprised to see AIRBUS come back to test its lows here around $50, but either way, even at current prices, I think it's still a good value. Now just think about this, if you picked up the stock here around $50 a share, and you had a long-term horizon, I strongly believe that this will be a stock that will recover back to its highs over time. Now this may take years, but I believe that it will eventually happen. If that does happen, you would have essentially tripled your investment in what I would consider a blue chip safe company in a relatively short period of time. So there's a ton of opportunity here with AIRBUS if you believe this industry will come out of this stronger, which I do. Now one thing to note if you are interested in looking into AIRBUS is that they have a couple of ticker symbols because they are a European company. So the main shares are actually traded in Europe, but if you want to own them on an American exchange, there are two options. It's either EADSF or EADSY. And from my understanding here, EADSF are actual shares just traded on the American exchange, and EADSY is actually currently traded as an ADR on the exchange. So really it comes down to personal preference as to which one you want to pick. I would personally pick the SF option just because that kind of gives me a bit more confidence here. Not a huge fan of holding ADRs in general. But anyways, bottom line, as much as I'm a big fan of Boeing, it's hard to really ignore their number one competitor here when it's also presenting us such a great opportunity for an entry. So Honeywell is the third company that I want to cover in today's video because it is a company that does not go on sale very often. However, we are seeing some value here today. Many know this company for the consumer products, but they do much more than that. They do aerospace, which is by far their biggest segment, as well as building technologies, performance materials and technologies, and safety and productivity solutions. 2019 was a good year for their aerospace division, but we just talked about Airbus and Boeing and how they're going through issues. So in my opinion, 2020 will not be a strong year for this segment for Honeywell. We'll have to wait and see if other segments can pick up some of the slack, but more likely than not, this will be a down year overall for the company. Now here was their previously posted 2020 guidance before all of these issues hit, which is not going to be accurate anymore thanks to global issues, but it gives us an idea as to what the company would have done if this was a healthy year. Just remember that we look for businesses over the long term, so I strongly believe Honeywell would get to these levels at some point in the future, although it may take a few years for them to recover. They expected around $37 billion in sales, resulting in EPS growing by around 8 to 10% and free cash flow of around $6 billion. These are extremely strong numbers in a normal economic environment. They did, however, state that headwinds from the 737 MAX would weigh down their earnings, so that was accounted for. And what I found ironic is that they said there could be some 2020 cash headwinds, but I bet they were not expecting these headwinds to be so strong with the global issue. And Honeywell is really suffering from this right now, as with many other companies, especially those that have exposure to the aerospace industry. Now, unlike Align, who does not pay a dividend, and Airbus, who suspended their dividend, Honeywell hasn't announced anything to interrupt their dividend payments. They currently yield 2.74% with a healthy payout ratio and a growth streak of 16 years. They got through the 2008 and 2009 recession with dividend growth, so I imagine keeping their dividend going is top priority for them. I would say for now the dividend remains relatively safe considering they have over $10 billion in cash and only $3.5 billion owed in short-term debt. I wouldn't be very concerned here with the dividend getting cut, but that's just my personal opinion. Now, I mentioned Honeywell rarely goes on sale, and even now it has only about a 27% upside, but it still maintains a strong buy rating at tip ranks. So this clearly tells us that analysts, although they do see some short-term issues, are generally optimistic about this business. Looking at their charts here during the big sell-off the market has seen, Honeywell came down to levels it hadn't seen since 2015, but you can clearly see from this candlestick that it got bought up very quick, going from almost $100 a share to now sitting at around $130 a share in a snap of a finger. Investors saw a ton of value at those prices, and we'd be lucky to see these prices again, but I'd be watching it very closely. The company will have a tough 2020 for sure, as it supplies the aerospace companies, and that industry is going to hurt incredibly hard in 2020. But as with all my investments, including Honeywell, Align, and even Airbus, I'm looking maybe 3 to 5 years out, maybe even more, and I think over that time period, things will recover for the company, and it will be back to growing the way it was in 2019. Now in this video, just for your reference, the analyst information was provided by TipRanks and the charts were provided by TradingView. If you're interested in either of those platforms, check out the description below for links. But what I'd love to do now is turn it over to you, and I'd love to hear your honest opinion on these three stocks. Would you be interested in buying any of these companies? Are these companies you already hold in your portfolio? Or are these companies that just don't interest you at all? If that's the case, let me know what stocks you're looking to buy here in April 2020. Either way, guys, hope you enjoyed this video, but don't forget to invest positively, and I'll see you in the next one. Peace.